Global technology stocks are under pressure after worries of an overheated AI boom had investors pulling back on shares of SK Hynix and Samsung. Investors are asking whether AI spending will pay off, but our next guest believes this pullback may be an entry point for more perspective and other themes driving the market. Let's bring in Chris Kampitsis, managing partner at Barnum Financial Group. Good morning. Thanks for joining us.
Good morning, Lindsay.
Let's start with what we're seeing with the latest pullback on SK Hynix and Samsung. What does this signify to you? Is this kind of a more broader story about chipmaker stocks right now, or is this something different?
No, look, I think the South Korean market has been pulling back quite a bit. We had the IPO last week in the U.S. The U.S. ADR is trading at a premium to the Korean listing. I view this as really more of just a macro pullback. I don't think it's a company-specific issue. There's been no change in customers, no drop in orders, really no material reason to all of a sudden be selling the stock here.
Because I was wondering too, like, does the move for SK Hynix maybe suggest investors got overly enthusiastic about that listing on the NASDAQ last week? But it sounds like you don't think so.
Yeah, I don't think so. I think in reality, investors want to look for these opportunities. If we get a pullback because of geopolitical concerns or just general profit taking, if you believe that AI is going to be the theme, the technology that's going to drive the economy over the next several years, I look at these opportunities as a blessing.
Okay, so you obviously feel this is an entry point and not kind of an end to the AI boom, as some people sometimes talk about. Is it or isn't it, obviously? An entry point into any specific companies or sectors, do you think, when it comes to the AI-related theme?
Yeah, so we take a two-pronged approach here, right? We want to always have a shopping list. Companies we like, but not necessarily at the current valuation. And so if you've been waiting on the sidelines, looking to purchase and get into the hyperscalers, looking to purchase the picks and shovels, get into memory, get into semiconductors, now you have a bit of an opportunity starting to form. And I would be looking at those stocks on my shopping list and say, let's start purchasing here.
You mentioned there is a retro wave happening right now. What do you mean by that?
Well, in a sense, what you're seeing is two prongs to the approach, right? So you have technology, you have artificial intelligence, and they're continuing to be the growth story of the market, and that's not going away. But there are sectors that have been out of favor for a prolonged period of time. Think financials, which are reporting this week. Think healthcare. We talked about consumer staples earlier in the year. They've had a particularly strong year. We continue to like those sectors as an alternative to growth, and simply so much capital has been focused on technology and focused on artificial intelligence that there's a real valuation opportunity on the value side of the spectrum.
And you also say the earnings season, this next earnings season, will likely continue to be challenging for the Mag 7 and some of the other hyperscalers. Why do you feel that?
Yeah, since last summer, we've seen this pattern where unless one of these technology companies has established a triple play where they've beat on revenue, they've beat on profits, they've raised forward guidance, the stocks, generally speaking, have gotten a bit pummeled. And that's where the buying opportunity has seemed to be as they've then recovered from post-earnings call up until the next earnings call. So we expect that the tests will continue to get tougher as corporate earnings continue to go higher and higher and higher. I mean, they've been driving the market. They've been driving the economy. I believe that they will continue to impress, but the tests are getting tougher, and those can be potential buying opportunities post-earnings call.
Right, because it seems like expectations are just so high now for some of these companies. Is that part of it?
I think that's all of it. You know, if you miss profit expectations by 1%, the stock is likely to get beaten up. So meanwhile, we're talking about significant amounts of revenue and profit and extraordinarily well-run companies, but they've been spending a lot of money investing in artificial intelligence. And now investors are saying, not, hey, are you spending, are you participating? but where's the ROI? When are we going to start to see it? And investors have the right to be impatient, but ultimately, we believe the patience will be rewarded.
Okay, so let's talk about a couple of different sectors. You already mentioned financials as something interesting to watch. Another sector that you're watching right now is healthcare and biotech. What is so interesting about this sector to you right now? What are you watching for?
Well, number one, valuations have really taken a hit, especially since the election and maybe some changes on a governmental level that have potentially threatened healthcare. But on top of that, we see a tremendous opportunity when you think of what technological and artificial intelligence improvements can do, and then look for a sector that has yet to have that priced in, whether it's improvement in the efficiency of trials, in cost, in waste, in spending, in formulations. There's a tremendous opportunity in healthcare and biotech. You're starting to see it lately. Prices have improved versus the beginning of last quarter, but there's still tremendous room to run in this sector from our vantage point.
It seems as though there's a lot of M&A in biotech in particular right now. Would you agree with that? And are we going to see more of that moving forward?
I agree with that quite a bit. And that's also a reason why we like financials, just to reemphasize that point that you made earlier. There's so much deal activity. There's a renewed interest in IPOs. You know, we just had SpaceX, so a couple big IPOs to come. So with all the deal making being done, the financials benefit quite a bit. And a slight raise in interest rates, should that happen, is not going to hurt revenue and profit potential. That's for sure when it comes to the financial sector.
Okay, we'll leave it there. Chris Kampitsis, managing partner at Barnum Financial Group. Appreciate your time this morning. Thanks for joining us.